Hello, this is Jordan, and this video is being recorded after the close on Thursday afternoon, July 30th, 2019. And in this short video, I'm going to discuss junior financings and the things you should consider when researching an individual junior with respect to financing. Now, first off, this is a chart from Oren Inc. and Kai Hoffman, who's the CEO of Oren Inc., and they track the amount of financings, the dollar amount of financings in the junior sector in Canada. And in this chart, the histogram is the 5-week average during that particular week, and the line is just the current amount of financing. So looking over the past, let's say 2 months, you can see that most of the time we appear to be above the 5-week average. So perhaps moving forward, as long as metals prices stay where they are, we can expect an above average amount of financings. And if metals prices were to rise in the coming months, we would obviously expect more financings and this activity to increase. Now, when it comes to a financing, the most important question we should ask is that company adding value? Are they going to add value with this money that they're getting? Because if they're not going to do that, and they're not doing the kind of work, and they're just paying to keep the lights on for another 12 months, and it, maybe it's a lifestyle company and they're really not doing that much, then dilution is a significant issue. Then, as a shareholder, if you don't participate in that financing, you're being diluted, and the company itself, if it's not adding value, is therefore losing value. Now, however, if we're talking about adding value through exploration, we want to make sure that the company is doing the kind of work or the kind of drilling that the market cares about, because that isn't always the case. Sometimes there's work to be done, and it has to be done, and it is important, but the market may not value it or really care about it. And so in that instance, that's something that down the line that can lead to an opportunity to buy that company at a discounted price. But initially, it might be the opposite. Now, with respect to producers, the question is the raise going to allow the company to either begin production or facilitate an increase in production? Now, with respect to a producer or a near producer, development work is very important, but a lot of times the market doesn't really care that much about it. I mean, we've seen that chart of the life cycle of a junior miner. It's during that development phase where typically the stock doesn't perform as well because they're raising money, dilution is a factor, and the market doesn't care about that work, even though it's important at that particular time. So that's something to keep in mind for producers. Now, the terms of the financing are also important. Right now, it looks like we're seeing a lot of financings that include half warrants because you have to, as a company, you have to incentivize people to participate in the financing. Now, why would they buy the financing if they could just buy the stock in the market? Now, that's not the case for a big investor, a big group, which we'll get to later. But nevertheless, what we're seeing right now in most cases is half warrants. So for, let's say the stock they're selling shares at 20 cents and then you get a half warrant at 30 cents. So if you did 1,000 shares at 20 cents, you would get 500 warrants at 30 cents, which is great. However, if you don't participate in that stock financing, and you're just holding the stock, some groups who participate in financings, they're going to sell the stock and then just hold the warrants. So there's a 4-month hold. So you have to consider, who's participating in the financing and whether or not they're going to dump the stock when they can 4 months after the financing, because they just want to cut their risk there, and then they'll just hold the warrant, which is basically it's a free ride. But that being said, looking at the perspective from someone who's not participating in the financing, it's something you have to consider, because after 4 months, there's a potential for that supply to come to the market and for the stock price to go lower. And if it's a company you really like, then that also creates a potential opportunity. So that's something you have to consider when you're trying to time your buy of a certain stock, or even time your sell. I mean, a stock could have a great run after a financing, and you could be aware that the 4-month hold is about to come off, and doing your research, there could be a lot of people who participated who are going to dump the stock and then just hold the warrants. That could be a time to trim your position or sell the entire position. And lastly, consider who is participating in the financing. Is it just a bunch of retail, or is it a big group, or even a big investor like Eric Sprott, who is participating in a lot of financings? That's good if it's a big group or someone like Eric Sprott, because they have too much stock to be able to dump it on the market and then just hold the warrant. So when a company can finance with someone like that taking a big fraction of the financing, it's good, because Sprott or that big investor or big group, they're going to hold their shares, and then that tightens the float. So that's another big holder, and it tightens the float because there's less stock available to be traded. So that's a good sign. But finally, it's not the end of the world if a company finances with all retail. You just have to consider, are they going to be adding a lot of value, and then what are the terms? What's the price of the warrants? Could those come into play? So it's not a one-size-fits-all analysis. That's all for today. I hope this information was helpful for you. If you did find it helpful, please subscribe to my channel and go get my book. Go to thedailygold.com. You can opt in there at the top. You can get my book, which contains all my best research on precious metals, and consider subscribing for my newsletter. It's only $149 for 6 months. Thank you so much for listening and watching this video, and I look forward to speaking with you again in the next video.